Ray is 71 years old, and last spring he handed the government $6,000 he never owed them. He didn't sign anything. He didn't make a mistake on a form. He did nothing. And that's exactly how it happened. Because there's a $6,000 tax break sitting out there right now for people 65 and older, $12,000 if you're married. And the cruel part is, you can qualify for every penny of it and still walk away with nothing, the same way Ray did. It's real, it's federal law, and it disappears after 2028. I'm going to show you the one simple thing Ray didn't do, the income line that quietly decides who gets the full amount and who gets nothing, and how to make sure you're not the next person to leave this money on the table. Because the system is counting on you not knowing this. If this video saves just one person from leaving $6,000 on the table, then I think it's worth it. And if you appreciate this type of content, hit that like button. It genuinely helps more seniors find this. Let's get into it right now. So let's start with the simplest question. What actually is this thing? Starting with the most recent tax year, there's a brand new deduction for Americans who are 65 and older. It's worth up to $6,000 per person. If you're married and both you and your spouse are 65 or older, that's $12,000 between the two of you. This came directly out of the major federal tax law passed recently, and the IRS has confirmed every piece of it. This is not a loophole. It's not a gray area. It's not some trick a salesman is trying to push on you. It's the law. Now, here's what makes this one different from almost every other tax break you've ever heard about. Normally, when it comes to deductions, you have to make a choice. You either take the standard deduction, the simple one, the one most folks use, where you don't have to itemize anything, or you go the other route and itemize where you add up all your individual receipts and write-offs. You pick one, you don't get both. This new $6,000 deduction breaks that rule. You get it either way. If you take the standard deduction, you get this on top. If you itemize, you still get this on top. It stacks. And that almost never happens in the tax code, which tells you just how significant this is for the people it covers. So why does this matter so much? Why am I making a whole video about it? Because the people who need this most are the ones most likely to miss it. This deduction is aimed squarely at retirees living on fixed incomes, people who counted every dollar on the way into retirement and are counting them even more carefully now. For someone living on Social Security and a modest pension, shielding thousands of dollars of income from taxes isn't a small thing. It can be the difference between owing the government money in the spring and getting a refund you weren't expecting. And the cruel irony is that the system does almost nothing to make sure these folks actually get it. Nobody from the government is going to call you. Nobody's going to knock on your door. The information is technically out there, but out there isn't the same as in your hands. So let me show you just how big this can actually get, because the number is bigger than most people expect. Picture a single person, 65 or older, who takes the standard deduction. They're already getting the regular standard deduction that everyone gets. On top of that, they get an additional amount just for being over 65. That's been in the code for a long time. And now, on top of all of that, you stack this new $6,000. When you add it all together, an eligible single filer can shield somewhere in the neighborhood of $23,750 of income from taxes before the IRS calculates a single dollar of what they owe. And for a married couple, where both spouses are 65 or older, you're looking at up to roughly $46,700 shielded from taxes. Let that sink in for a second. Around $46,000 of income completely off the table. For a retired couple, being careful with every dollar, that is enormous. That's not a rounding error. That's real money staying in your pocket instead of going to Washington. And if you're finding this helpful so far, go ahead and tap that like button. It really does help more people discover this video. And this is exactly the kind of thing that needs to get in front of as many seniors as possible. All right, now I need to slow down because here's where the good news turns into a trap for the people who aren't paying attention. For the people who aren't paying attention, there is one number buried in this law that decides everything. And if you cross it without realizing, this deduction starts shrinking, sir, and eventually disappears completely. Let me show you exactly where that line sits, because a lot of people are closer to it than they think. Here is the number that you really need to know. The full deduction goes to single filers with income under $75,000 and to married couples filing jointly with income under $150,000. Stay under that line and you get the whole thing. But the moment you go over, it begins to phase out, which is just a polite bureaucratic way of saying they start taking it away from you, a little at a time. And it vanishes entirely once a single filer's income hits $175,000, or a couple's hits $250,000. Now you might be thinking, well, I'm comfortably under that, so none of this applies to me. And maybe you're right, but here's where good, careful people get burned. So I really want you to hear this part clearly. It is not just your Social Security check that counts toward that number, it's your modified adjusted gross income, and that means everything added together. Your pension, withdrawals from your retirement accounts, any part-time work, interest, dividends, all of it stacked into one number. And a lot of seniors are sitting closer to that $75,000 line than they realize, especially in a year where they pulled a larger than usual amount out of an IRA or sold a property or cashed something in. I've seen situations where someone accidentally pushed themselves over that line by just a few $1,000s and lost a chunk of this deduction they never needed to lose, simply because no one ever warned them that one financial decision in December could quietly cost them in April. That right there is the institutional failure at the heart of all this. The information exists, nobody hands it to you, the system isn't built to protect you, it's built to process you. But here's the thing about Ray, the man I told you about at the start. Ray's mistake had nothing to do with this income line. Ray was nowhere near it. His mistake was something far simpler and far more common. So let's finally talk about what actually happened to Ray. Ray is 71 years old. He's a widower. He worked his whole life, retired from a job he was genuinely proud of, and now he lives on his Social Security plus a small pension. His income is modest, well under that $75,000 line, which means Ray qualified for the full $6,000 deduction without any question whatsoever. So what went wrong? Ray didn't file a tax return. For years, Ray figured the same thing a lot of seniors figure. He thought, my income is so low that I'm not even required to file a return, so why go through the hassle? And here's the tricky part. Technically, he was right that he wasn't required to file. But here's the trap nobody ever warned him about. If you don't file a return, you don't claim the deduction. There is no deduction fairy who mails you a check in the spring. The money only comes to you if a return actually gets filed, because he skipped the one step that unlocks the whole thing, and Ray is far from alone. There are nearly 1 in 4 individuals age 70 or older, that's millions of seniors, who skip filing every single year, leaving real life-changing money sitting in the government's pocket instead of their own. Now, quick break, because this matters. If this video is opening your eyes to something you didn't know, I've gathered some helpful resources on this topic for you. Check the description and the pinned comment below. I'll point you toward where to start so you can look into your own situation. It's all right there waiting for you. So Ray, a man who qualified for every single penny of this break, got nothing. All right, so now the most important part. How do you actually claim this thing? Here's the good news, and it's genuinely good. For most people, claiming this deduction is almost automatic as long as you file. If you use tax software or you use a paid preparer, the deduction gets calculated and applied for you. You don't have to hunt down some special secret form. You don't need a magic code word. It rides along on your regular 1040, or the version built for seniors, the 1040-SR. So the single most important thing you can take away from this entire video is this: the moment you enter your date of birth and your income. If you are 65 or older, file a return, even if you don't think you're required to. That one simple step is what turns this deduction from a headline into actual dollars in your pocket. I want to say that one more time because it really is the whole ball game. You do not have to be a tax expert. You do not have to fill out anything complicated. You just have to file. The form does the rest. For someone like Ray, that's the entire difference between $6,000 and nothing. And it came down to one afternoon of paperwork he assumed he didn't need to bother with. And hey, if you're getting value out of this, consider subscribing. I put out videos like this regularly, breaking down exactly what seniors are owed and the things the system quietly hopes you'll never figure out. It's free and it keeps you a step ahead. But what if you're sitting there right now realizing you already messed this up? What if you or your spouse or your parent skipped filing or filed and somehow missed this entirely? This is the part I really want you to hear because most people have no idea it exists. You are very likely not out of luck. The IRS generally allows you to go back and file or to amend a return you've already submitted for up to 3 years. Let me say that as plainly as I can. In most cases, you can go back and claim money you already missed. That is not wishful thinking. It's not a maybe. It's a built-in second chance that the vast majority of people never use, purely because nobody ever told them it was there. So if you're realizing right now that you or someone you love qualified for this and didn't get it, there may still be a door open. If you're comfortable handling it yourself, tax software can walk you through an amended return. If you're not comfortable, this is exactly the kind of thing a low-cost tax preparer can handle, or one of the free tax help programs set up specifically for seniors. Programs like the IRS Tax Counseling for the Elderly and AARP Foundation Tax Aid are ready to help. The point is simple. Do not assume the door is closed just because a deadline came and went. For a whole lot of you watching, it isn't closed at all. And that is absolutely worth a phone call. Before we wrap up, do me one favor. Drop a comment below and let me know, did you know about this $6,000 deduction before watching? Or is this the first you're hearing of it? I read the comments, and the things you tell me you're confused about are exactly what I turn into the next videos. So let's bring this all home because there's one last thing you need to lock in. So let's bring this all home. There's a $6,000 deduction per person, $12,000 for a qualifying couple, for seniors who are 65 and up. You get it whether you take the standard deduction or you itemize. The full amount goes to singles under $75,000 and couples under $150,000, and it shrinks above that until it's gone. It lives on Schedule 1A, line 37. It only exists through the 2028 tax year, so that clock is ticking louder every single year. And the one mistake that costs people everything isn't being over the income line. It's not filing at all, exactly like Ray. So if you take one single thing away from this video, let it be this. File the return, claim what is rightfully yours. And if you already missed it, go back and fix it while you still can. Now I have to say this clearly, because it matters. I am not a tax attorney. I am not your accountant. This video is for education, not personal tax or financial advice. Your situation is your own, so before you make any move, run it by a qualified tax professional who can look at your actual numbers and your actual return. And if you want to keep going, there's another tax trap I see seniors fall into constantly. One that has nothing to do with deductions and everything to do with how your Social Security itself gets taxed. Once your income crosses a certain hidden line, most people don't even realize it's happening to them, and it's quietly shrinking their checks every month. I made a full video breaking that one down, and you can check it out by clicking right here. I'll see you over there.